Welcome back, traders and investors. Greg Harmon on the line. He is CIO and partner at Presidium Capital and also the founder of Dragonfly Capital. He's the author of Trading Options, using technical analysis to design winning trades. Greg, how you doing on this Monday morning?
I'm doing well, Joel. How about yourself?
We're doing good. Well, we had quite an exciting day on Friday. We had High Frequency Friday show on Benzinga. You had the Quad Witch. You had the Yahoo Alibaba or the Alibaba IPO. Let's go to that. First day of trading in a stock. Is it something that you like to get involved in, or obviously the options aren't open, or is it something you wait for to trade for a few days or a few weeks before you get involved?
Yeah, for an IPO, for a technical trader, there's no price history, so there's really no reason and no ability to trade it. If you want to jump down to a really small time frame and use Fibonacci's, they seem to work fairly well on the first day, but 5-minute charts for day trading is not really my thing. So I'd like to see it perform for a bit longer than that.
Okay, we had a little bit more history on Yahoo. Is that nice run up into the IPO, starting to give a little back, couple downgrades today. Have you been trading or positioning yourself at shares of Yahoo?
I've been watching Yahoo. I wrote something on it last week from a longer term perspective. There's a lot going on in the stock, I think. It's at some really key levels in terms of the monthly chart. And if it can get back over and stay over 42.50, hold up following this IPO, it's got potential to move significantly higher. But all that's weighed against the backdrop of, I guess, the world expecting that the entire valuation of Yahoo was being buffeted just by the Alibaba stake, so that's time to sell off. So I think it's important if it continues to hold up here. And, maybe you give up that hope if it gets under 35, where it hit the low points earlier this year.
And what's the significance of the 42.50 level to you?
If you look at a long-term monthly chart, it's right around the peak that we saw back in 2005. And there's a significant consolidation zone between, let's say, 44.50 and 35 that took place right before the tech bubble in 1999. So there's a lot of price history here, but if you get above that 42.50 to 43 area, there's virtually no price history, and there's nothing to keep it from going higher.
Okay, good point. I was looking at the multiple closes in that area last week. So how about the market? You had the Quad Witch on Friday. Any good or unusual options activity of note?
Well, with the OPEX and the quad witching and all that, there was a lot of Momo names, especially, that were really getting jerked around a lot last week, and I had a lot of subscribers worried about things like Apple and Facebook and Twitter. They looked like they were really going to crap the bed and then came back. So it's a tough week to trade options. I try to get positions beyond that and to get out early in the week and move on to longer periods if I'm looking to continue to hold.
Okay, so you don't do anything. You like to go out a week farther. I think a lot of times that's a good call too, because there's a lot of pinning with the stock and everything, and it's good sometimes a week after you really get the follow through. So you said your clients were worried about Apple and Facebook and Twitter. Let's touch on those issues. Apple got the nice pop here when it was revealed about the iPhone sales being in the 10 million range. Some people were looking for 12 million, but 10 million seems to be a good number. Now bunching up here near the 102 level. I did notice a double top at 102.35. What are you looking to play out in Apple?
I think Apple is probably going to end up looking pretty strong. Maybe it pulls back to the 98 area, 96 area, something like that. But I don't think you get any more than that. Maybe the event's over now. You've sold 12 million phones in a week. You've created this demand based on not giving people what they wanted with a big screen up until this time. But the chart tells me, yeah, maybe there's a small amount of pullback in it, but I don't see a whole lot at this point.
Okay, and what about Facebook? We got Facebook trading down 70 cents here in pre-market action. What are you looking at in Facebook?
Facebook, I'm actually long the stock in personal accounts. This one screwed me on Friday. I did have a trade on for options expiration for this one based on the large open interest at 80 last week. I thought we might see a move up to there, so I had some 77.580 call spreads on. And it did start to move up, but just not fast enough. I see this one, we're bouncing up against this 78 level. That's an important level. And, maybe we pull back again a little bit today. It seems like we're going to have a red open today across the board. But as long as we hold over, say 75.50, something 75, I'd like this stock to the upside still.
I mean, for your long-term position, that's what you're looking at, or just in the shorter term? Like, what would get you out of the stock, long term?
If you were a long-term holder, I'd say a move under 70, 71, 75, or 72, that area, which would have been the bottom in August and the peak back in March of this year. If you get below that 72 area, I'd say you've got a possible change of character going, and it maybe drops down to the 62 area. So that's a little more than I want to tolerate.
Right, and you had to gap up after earnings, and it just sniffed that level one time, and then really has been back up. And I noticed, it needs a clear. I think there's a double top at 78.35, or at least 3 or 4 tops up in the lower 78s to keep an eye on. And you said some of your customers were concerned about Twitter. Seems like it's just holding 50, doesn't want to spend a lot of time under 50. Could you give us your long and short-term outlook for shares of Twitter?
Yeah, and Twitter looks like it's in fine shape as well. It might bounce back off of the 54 level again. It hasn't been there since early March. But Bollinger Bands are running a little flat up there. They need to pump up to let it get a bit higher. But you see things like on a really short-term basis, the MACD is turning back up. The RSI is going back up. You've got a possible what's called an RSI positive reversal. If you look at the bottom in August and then the bottom that was incurred last week, the price action put in a higher low, where the RSI put in a lower low. So this has potential from a technical trading perspective to take a run from that 42.50 area where the August low was to the 53.50 area. So 11-point run. If you project that back onto the low from last week at about 48, you've got a move up to possibly 59 projected on that.
Okay, what about the internals on the market as a whole? Any cause for concern here after the quad witch? Seems to spend some time over 2,000 basis the futures here, but hasn't been able to have a sustained closes. What are you looking for in the market?
Yeah, I think for a day trader, I think that you've got the risk of some short-term downside. If you're more of a swing trader, you've got more chop going on. Look to, say, the IWM as your guide there, and it's been basically moving sideways in a range for 6 months. Longer term, the trend still looks higher, and it still looks healthy to own stocks. But you may have some short-term pullbacks, so maybe it's an opportunity.
Okay. All right. Greg Harmon, CIO and partner at Presidium Capital and founder of Dragonfly Capital, sharing his views on some of the momos, the market as well. Greg, thanks a lot for coming on. Have a good week, and we hope to speak to you again soon.
You too, Joel. Thanks for having me.